Welcome to the Techno Fundamental Report for January 22nd. The thing about technical analysis is that it's a visual experience. So when I show you these charts and talk about technical analysis, it's just what I see. Do you see what I see? It's just a matter of understanding that. Now, when it comes to strategy, it's a high-risk strategy where profit depends on finding a more speculative buyer before the market corrects, not on the actual asset's actual worth. So in other words, you kind of have to put your blinders on. Like, back in the old days, you had horses that would go through the city pulling carriages, and they would have distractions. Well, they put blinders on these horses to keep them from getting distracted. So don't do something stupid, hoping someone else is more stupid. In other words, you put your blinders on and just realize that you have a specialty that you deal in, and that's that. So don't chase every trade. Now, we're going to talk a little bit about the Magnificent Seven, which have been driving the indexes for the last several years, 3 to 5 years, have been primarily dominated by 7 stocks. Now, Warren Buffett was very big on focus investing in his early days. Now, here's a book called The Warren Buffett Portfolio by Robert Hangstrom. He says in the book, it was a defining moment for 2 reasons, because he interviewed Warren Buffett. And he said, first, it moved my thinking in a totally new direction. And second, it gave me a name to an approach to portfolio management that I instinctively felt made wonderful sense, but that our industry has long overlooked. That approach is what we now call focus investing, and it is the exact opposite of what most people imagine that experienced investors do. So we are focused investors, just like Warren Buffett in his early days. Now, just to kind of check on the economy real quick, the trade deficit is improving. The U.S. trade deficit in goods and services ranked at $29.4 billion in October, down from $48.1 billion in the prior month, as the Trump administration's tariff reshaped global trade. So we're seeing an improvement in the trade deficit. Now, inflation is improving as well. Now, this is called the Trueflation U.S. CPI Index. Inflation is also coming down as inflation due to inflation was overestimated by classical economists. The most recent CPI number came in at 0.1%, under estimates for both year-over-year and month-over-month core CPI as 2.6% and 0.2% respectively. So inflation is improving. GDP estimates. We also have a surprise upside revision by Atlanta Fed GDP Now, which predicts GDP to come in at a whopping 5.4% for fourth quarter from 2.7% previously. Real personal consumption expenditures increased from 2.4% to 3%. Net exports increased from a negative 0.3 to a positive 1.97. Cooling inflation, higher production, and higher GDP all seem promising for the U.S. economy. So this is really good news. Now let's talk about what's going on with the markets. You can see here I've got a graph going back several years, and this is describing the small caps, which I'm doing here as a ratio, is the small cap index called the S&P 600 compared to the Vanguard mega cap growth. So this is mainly Mag 7 stocks. So you can see that over the last couple of years, as the line goes down, it means that small caps have been underperforming the mega cap growth area. Now, this is a trap, because what can happen is everybody gets real discouraged with small caps, mid caps, the growth stocks basically. And you can see here in November we hit like a climactic low, but we're breaking out for the first time. Now, you have to realize here, back in 24 we had similar head fakes. But hopefully this is a follow through with the growth stocks, because the growth stocks have been underperforming here for quite a while. That could change, and I think we might be seeing signs of that change. Now, you want to follow the line of least resistance. The trend is your friend. So here I have Apple Computer, which is one of the Mag 7s. So we're going to look at the Mag 7s here today. You can see here base, break below the base, break below the base in a downtrend. So the Mag 7s may be starting to reverse here. Here's Amazon. You can see the line of least resistance is basically down. Here is Google. Now, Google is holding up the best. Google is holding in there quite well. But it's the only one of the Mag 7 that I can say that about. Meta, which is Facebook's, basically in a downtrend below the 200-day moving average, not looking that promising. Here's Microsoft, really looking rough. You got the moving average is in a downtrend below the 200-day moving average in a downtrend. Here is NVIDIA. Now, NVIDIA is struggling to hold this level here. Yesterday, when we had the big drop in the market, it broke down below the line of least resistance and is trying to hold it. Now, if we get a break below 170, that would be quite concerning, not only for the Mag 7 and the AI situation, but for the market overall. But if we can break out to the upside, that would be a different story. So a move on NVIDIA back above 195, 192.5 would be a very positive sign, but we're not seeing it yet. Here's Tesla, same story. We're just getting a break below, let's see, where the 200-day is here. So it hasn't broken the 200-day, but it has broken the 50-day, and it's not currently in an uptrend. So what I'm pointing out here is the aggression index, which we think is a very powerful indicator. It's where we're taking the NASDAQ, which is growth stocks, compared to consumer staples, which is defensive value stocks. You can see this all peaked right around the beginning of November, came down, correction, moving sideways, and breaking down again. So basically the bottom line here is the growth stocks are lagging, which is not a good sign. So let's just keep an eye on things. Right now, just kind of keep your powder dry, but look for opportunities, but not yet. We want to see the aggression index improve. We want to get above these moving averages, but it just isn't happening yet. So we continue to stay cautious. Let me know if you have any questions. Thank you very much.